So good morning once again and welcome to our lecture 8 on the principles of taxation. And this lecture will look at capital allowance. Capital allowance. All right. Now, what is capital allowance and how do we calculate capital allowance? We know the concept of depreciation in terms of financial reporting. And here we are just looking at its synonymical terms when it comes to the way the GRA handles our depreciation. So capital allowance is just like depreciation. So depreciation is used in the reporting term in the same way, the way we calculate depreciation when it comes to the GRA perspective, they call it what? Capital allowance. So now what happens is that, or depreciable allowance, all right? What happens is that the GRA will ignore or will add back your depreciation and now grant you your depreciation allowance or capital allowance. All right, so basically that is that. So what is a capital allowance? Now, like you've seen here, I said that it is a standardized deductible allowance in place of what? Your financial reporting depreciation. All right. But capital allowance here is given on a depreciable asset. We don't give capital allowance on any other asset than the fact that the asset for which the capital allowance is given is a depreciable asset. Not only the fact that it is a depreciable asset, but also the fact that you use that depreciable asset or in the production of what? Income. All right. You actually used it in producing an income. All right. Now, if you remember when we were doing the business income, now we saw that in section 9, there is what we call the residual deduction rule. Okay. So the residual deduction rule. And from the residual deduction rule, it is from that perspective, we actually go ahead to learn that before an expense or any amount can be allowed as a deduction, it must pass through the concept of new. All right, so that is the acronym I've given for it, new. All right, the thing has to be what? Necessary, which means that without it, you cannot produce an income. So it must be necessary, all right, in terms of generating income. It has to be exclusive. Exclusive. Exclusivity talks about the purpose, all right? So here it must serve a business purpose. Okay, so if it is serving a personal purpose, we won't give you anything on that. It will not be allowed as a deduction. Then here, wholly, we are talking about the amount. All right, it means the entire amount should be exclusively necessary for the production of an income. All right, that is what we learned. But we also learned something that in the same residual deduction rule, the same section, it also said that capital expenditures are not allowed for deduction. So it means that if you want if the expenditure has to be deducted, it has to be of a revenue nature. All right, revenue, unless it is a research and development expense. It is only research and development expense on a normal business. It's different from oil and gas or petroleum and mining. It is only in normal business that if the what do we call it? The research and expenditure is even expense, even though it may span more than 1 year, because any expense for which the benefit is enjoyed more than 1 year is what we call a capital expenditure. But research expense, research and development, it doesn't matter. You are allowed to be given as what? An expense. All right, it doesn't matter the span. Now, because of that, we said that those ones that are capital in nature, what you get for them is what? Capital allowance. Capital allowance. All right, so that is that. Capital allowance is simply the the part of the asset that the GRA allows you to recoup, all right, to get back on regular yearly basis, all right, to defray the cost of using the assets. All right, so basically that is that. Now, when we talk about a depreciable asset, we are talking about an asset that when you use is used in the production of income, or you use it in your business process, and it is subjected to wear and tear. All right, it's subjected to wearing and tear or obsolescence. All right, so that is what a depreciable asset means. So we said that a depreciable asset means an asset to the extent that which, when it is used in the production of an income from a business, it loses its value because of what? Wear and tear, obsolescence, and passage of time. And a depreciable asset also does not include goodwill. It does not include a land. So you see, it doesn't include interest in a land, a membership interest in an entity, and a trading stock. All right. So these don't form part of. So if you see a land in for the purposes of capital allowance, it is not allowed because land is what? Not a depreciable asset. All right. So that is that. So basically that is that. All right. So capital allowance shall not be granted on cost incurred in acquiring goodwill and what? An interest in a land. All right. So that is that. Now we look at the base rules or the basic rules for granting capital allowance. All right. Before GRA can grant you capital allowance, number one, the asset we've said must be what? Depreciable asset. All right. Number two is that the depreciable asset must be owned by the person, or a person here means an entity. All right. So that is that. And if it is an individual, you are doing a self-employed, it must be, all right, owned by you. Again, the depreciable asset must be used in carrying on business, i.e., what we are saying is that it must be used in the production of an income. All right, it must be used in the production of an income. And also, I mean, to back up some points earlier, depreciable asset must be owned at the end of the basis period, all right, ending within the year of assessment. So it still bears to the fact that the depreciable assets must be owned by all the entity. All right, so that is that. Now, we also said that it must be granted in respect for a particular year of assessment. And capital allowance shall not be what? Deferred by a person who is entitled to the capital allowance. So if you are entitled to it this year, you cannot say that you want to push it forward. So this means that capital allowance is granted and should be treated like any other expense, okay, that is deductible against your income. All right, so basically that is where the concept is coming from. It is given in place of your financial reporting depreciation. All right, now in capital allowance, we use the pool system. We use the pool system. Now, what is the pool system? The pool system means that if you have assets that are, that are in the same class, like the way in FR we do PP, all right, they are in the same class. For the purpose of capital allowance, we put them together. All right, so we put all of them together. So you put assets in the same class together for the purposes of what? Capital allowance. All right, so that is that. That is that. Then when you put them together, you must give them a description. All right, so pulling together. So like you see here, pulling together, you must put them all together. Add all the amount, okay? Then give them an identity. So you give them a description. So if it is a class 1, you give them class 1, class 2, you give them class 2, like that. All right. Then one thing you should understand is that once you become part of the pool, your individual identity is lost. It's lost. All right. It's like a woman and a man coming together as a married couple. Once you come together, there is nothing like me. It is always like us. All right. So that is that. Okay. So once you become part of the pool, your individual identity is lost. So you see here, the identity of the asset is lost the moment it is placed in what? In the pool. Okay, so we can't be looking at you alone. We look at you in the perspective of a pool, all right? So that is that. So the assets will be placed in their respective pools. Now, again, so the pool description will be class 1, class 2, class 3. What you should understand is that it says that class 1 to class 3 depreciable asset follows the pool system. All right. Class 4 and 5 are also placed in the pool of their own. I will explain that one to you later. All right. So now what you need to do is that this is the law, the schedule, what the schedule has given us. So we are looking at capital allowance, which is section 14 of Act 896. All right. It's part of the allowable deduction. And we will look at it again in business income. All right. So business income taxation, you look at it because we will be looking at all the expenses starting from section 10. All right. And capital allowance is part of them. Okay. So that is that. Now, these are the classes. The class 1, class 2, class 3, class 4, and the class 5. Class 1 assets are computer and data handling equipment. All right. Computer and data handling equipment together with their peripherals. And the rate is 40%. Then we have automobiles, like your normal cars, all right, the cars that you use, buses, mini buses, goods vehicle, construction and earth moving machinery, and plant and machinery used in production. This is it. All right. We also have specialized trailers and trailer mounted containers. All these are in class 2. All right. But look at it, because the plant and machinery, we have two types. We have plant and machinery that are used in manufacturing and those that are not. All right. Because here in Ghana, the big generator that the banks use, we call it plant. All right. So you see, and when you go to the manufacturing companies, they have plants that they use in production. So you see the difference between the two. Now, the one that is in the bank, you realize that is placed in class 3. All right. So that will be in class 3. Okay, so that is that. So here we are looking at plant and machinery used in manufacturing. All right. Then we have assets resulting from expenses incurred by a person in the production of an income of that person in respect of planting vegetations from timber, rubber oil, palm, and crops are all in class 2. All right. Where the business is a timber concern or a large-scale rubber or a palm or a long-term crop plantation. Such of these expenses, all right, if they are incurred in securing a depreciable asset, all right, note that. So I've said that such expenses shall be treated as if they were incurred in securing securing the acquisition of a depreciable asset that are used in the production of an income. So the same thing. If you have expenses concerning vegetation, rubber, palm, all right, timber, we treat it as if you are using it to purchase a depreciable asset. And those depreciable assets may probably find themselves in a manufacturing of these crops, all right? So that is that, the product of the crops. All right. So basically that is that. Then we have railroad cars. These are the wagons, all right, locomotives, equipment, vessels, barges, tugs, all right, water transportation equipment, aircraft, specialized utility plants, equipment and machinery, office furniture, fittings, all right. So that is that. So and those that are not included in any other class. So if you have a plant and machinery that is not used in production, plant and equipment, this is where it is. Then class 4 talks about, and you see their respective percentages. Class 4 also talks about building and structures of similar permanent nature, which is 10%. Then we have what? Intangible assets, for which you use the useful life. That is if that intangible asset has a finite useful life. All right. So basically that is that. Now, so what you should understand is that you put them in their classes, respective classes. All right. Then, I mean, you work the depreciable allowances for them. All right. Now, so there is a template, as you can see here. You have to put in here class 1 asset, class 2 asset, then class 3 assets. Remember, we said that class 1 to 3 assets are follows the pool system. So always do these 3 classes together. Then when you are done, you come and do your class 4 asset. Now the class 4 asset, you can see that a class 4 or class 5 asset owned by a person in a year of assessment, for those one, what you do is that you put them in a pool of themselves. All right, so it means and I'll explain this thing further. It means for these ones, when you buy additional ones, you will be adding them. So let's say if I have 10,000 or 100,000 before and I buy additional assets in class 1, I will add it here. If that addition is, let's say, 50,000, I will be adding it up like this. But for the class 4, if I have a building 1 and I buy additional building, I won't be adding it like this. No, I'll create another class 4 for the building 2. All right. The same thing happens with the class 5 asset. That is why we say that they are placed in the pool of their own. All right. So the more building you buy, the more columns you open for that. All right. So basically, that is that. The same thing for the class 5 too. Intangibles. Patents can be one, trademark can be another. So you don't add trademark to patents. All right. So you create extra columns as and when they come in. All right. So basically, that is that. That is that. Now let's look at the basis of the depreciation. You've already seen the rates. You've already seen the rate. But what you should understand is that for the class 1 to class 3 assets, we use reducing balance. The law says we should use reducing balance. All right, reducing balance. Okay, then for class 4 to 4 and 5, as you saw, we use the straight line method. Straight line method. All right. So that is that. So like I said, for class 1 to 3, if there is addition, you add. If there is a disposal, you deduct. Okay. So then you get your depreciable basis. Then you do your capital allowance. But for class 4 and 5 assets, you create extra columns for them. All right. So basically, that is that. All right. All right. So now you've already seen how the percentage has been given. So here, the reducing balance concept, how do we go by it? The reducing balance concept. Here we use A by B by C divided by 365 days. Now, what is A? What is A? A is the depreciable basis. And what do we mean by the depreciable basis? So if the asset commence, you buy it afresh, the depreciable basis will be what? The cost. But subsequently, the depreciable basis will be the carrying amount. And here, carrying amount, we call it what? Written down value. All right. So that is that. Now, if you have cost and you add, you bought additional ones, you add. All right. Or you have a WDV and you buy additional ones, you add them. If there is a disposal, what you subtract the disposal. All right. So that is that. So basically that before you get your depreciable basis. Okay. Then what is B? B is the rate. All right. B is the rate. So if it is class 1, we know it is what? 40%. If it is class 2, it is 30%. If it is class 3, it is what? 20%. That is the rate. Then C, you have to be careful about C because C is the number of days in the basis period of the person. The number of days. The number of days. So, i.e., you have to look at the business commencement, the number of days from the day the business commenced to the end of the basis period. To end of the basis period. In the year of assessment. So it means that if I start my business on January 1, let's say 2023, then my basis period ends December 31st, 2023. It means that my C here will be 365 days. So it will be 365 multiplied by that. But let's say my business commenced on October 1. Then my basis period ends in December 31st of the same year. How will it be? That is where the things you learned in elementary school comes in. So December is 31. October is also 31. Then November is what? So December will give me 31. So that 30 days have September, April, June, and November. All the rest are 31, except February alone, which has 28 days or 29 in each leap year. Those things we learned, all right, in elementary. So October will be what? October, there will be 31 days. All right, that is that. October, November. November is what? 30 days. Then December, we have 31 days. So this one will give us 92. So what will be here will be 92. That is the commencement, all right, if the business commenced on 1st October. So you have to be careful about that. All right. So basically, that is it. All right. But as for the class 4 and 5, it is on cost. All right. So that is that. Anyway, so let's look at this example. We have a Roberto starting a business. You see the day he started the business. All right. And prepares account to 31st December each year. Okay. And the question is saying that the company acquired the following assets, 5 assets. And the 5 asset is costing what? 20,000. And they say that we should compute the capital allowance for the year 2016 year of assessment. So what do? You start with Roberto Limited. All right, then you go like computation of capital allowance. Then you bring the year of assessment. Year of assessment is 2016. So the basis period thereof will be what? So you have to be careful, because if it is a company, you have to understand that their basis period is what? The accounting year. All right, the accounting year. The year of assessment, according to section 18, is always the calendar year. If it is 2016, it's 2016. But the basis period of a company is its accounting year. But when your accounting year can start from, let's say, March of 1 year, let's say 2022, and it will end at 28 or 29 February of 2023. That is your accounting year. But as far as GRA is concerned, they will be assessing you. If they are assessing you in 2022, it is from March to the 31st. So basically, that is how they are doing it. But for accounting, the accounting year of a company being this, it means if GRA says it's examining you on 2022, it's examining you from this date to the 28th. But the year of assessment for that examination for GRA is 2022, not 2023. All right, so that is that. So the basis period herein will be what? January 2016 to 31st December 2016. So that is what you do. Then you drop in your currency sign nicely. All right. So you know that this example, we have computer. Computer is class 1. So that is that. So here you bring your balance brought down, which is in this case is the cost, right? is the cost, and it is what? 20,000. Then depreciable allowance, or depreciation allowance, or capital allowance, whichever name you give it, you know that it is 40% multiplying 20 all over 365 by 365 days. All right, so that is what you're going to do. When you do this, you have 8,000. So our WDV, carrying amount, or here we call it WDV. WDV carry down is what? 12,000. So basically that is how it works. All right, so that's all. Okay, now, so you have, as you see here, you can go ahead, and if the question says for 2016, we've ended 2016. If the question says go ahead and do for 2017, what you do is that you maintain your simple heading, but you come here and say year of assessment 2017, and you write the basis period being 01/01/2017 to 31st December 2017. Then you bring the WDV brought down. You bring in what do we call it? 12,000. Then you do depreciation allowance. You continue like that if there is no addition. But if there is additional purchase, then you add the additional purchase. If there is a disposal, you will less the disposal. All right. So this one, for example, if you look at what we have here, as far as what we have here is concerned, we are just doing it for this period. All right. And the 8,000 ends here. So assuming that there is an additional ones bought, let's say they bought 4,000, that is what you see here. You add it, get your balance, then you do your depreciation basis, then you get a new one. Balance carry down. So that is that. But like I told you, in the case of class 4 and 5, any addition to a specific asset should be placed in a pool on its own. So we won't be adding like the way we add, if there is an addition, we will come here and add for the class 1 to 3 assets. You see here, if there is an addition, you saw that it is added here. But in the class 4 and 5, we don't add here. So please be careful, and we will solve an example like that. You create a new column in that. That is what you'll be doing. You create a new column. All right. So you have to finish reading the entire question to see if there is a need of a new column for the class 4 asset or the class 5 asset. So when we solve the bigger picture, you will get it. All right. So that is that. Of course, I've said that when there is a disposal, what do? You deduct the disposal. So you see in this example, they bought 20. We start with the 20. All right. We start with the 20. And they had, so for this 2016, that was it. So you do the 2016. That will be all. Then in 2017, they bought 4,000. Another one. All right. 4,000. So you, in 2017, you do your written down brought forward. Then you add the 4,000. The question also said that in that same year, they sold 3,000. So you will negate, you deduct the 3,000. So as you see, then you have 13,000. So you see 16,000 minus 3,000 will give you 13,000. Then the 13,000 is what you calculate the depreciation allowance on, and you get this, and here you go. All right. So basically that is that. So we will be solving the bigger picture, all right, so that you will see how these things go. All right, you see it. All right. So now, what I need to tell you again is that these are keys. Key number 1 is that in the class 2 assets, we have the cars, all right. According to the law, the capital allowance is granted to non-commercial vehicles only up to 75,000 Ghana cedis. So it's not like the capital allowance is granted. The value on which you will be the capital allowance will be granted on is only 75,000 Ghana cedis. So it doesn't matter how much you bought the assets, capital allowance will only be given on an amount 75,000 Ghana cedis. So that is that. And I think this law should change by this time, because when they did this new amendment, I mean, those days 75,000 Ghana cedi was huge amount. But these days, 75,000 Ghana cedis, which car will it buy? Even if it is even more expensive, the new one, more expensive. So I think a look has to be taken on this capital allowance calculation for these assets. Now, so if you look at XY company who has bought a vehicle, and please, this thing is on non-commercial vehicles, okay? Non-commercial vehicles. When you talk about commercial vehicles, we are looking at cars that takes like the 13 passenger, and that takes more than a half ton. All right. So that is that. Now it says that, look at this. Look at this. The cost base of a road vehicle, other than a commercial vehicle, for capital allowance purposes, shall not exceed, 75,000 under paragraph 3. All right. So that is what you see there in the third schedule. So, and I've explained to you that those ones that are, non-commercial, because the commercial ones are the ones that we take here in Ghana. We call it the trusky. All right. So that is that. So if it is not a commercial car, then it means that you are limited up to 75,000 as a depreciable basis. All right. So that is that. So look at this entity buying a Nissan Patrol, which is a what do we call it? 250,000. Now we will limit our 30%. This is class 2. 30% on 75,000, not on 250. So that is that. Even though they bought it at 250, we will be giving the capital allowance only on 75,000. All right. So basically that is that. Again, where a depreciable basis is less than 500 Ghana cedis, it is given as an additional what? Capital allowance. All right. We give it to you for free. All right. So basically that is what you have there. So you look at this illustration. This entity has 3 depreciable assets that is being brought forward from 2015, and it is 600. We are meant to compute the capital allowance for the 2016 year of assessment. So you see that when we calculate the capital allowance, when we do, this is a class 3, so it's 20%. When you do the 20%, you have 120. The written down value is 480, which is below the 500. So we grant all the 480 as an additional what? Capital allowance. All right. Okay, so that is that. Now, then probably the last thing, or the last but one thing we will have to talk about, is isolated cases under capital allowance. Now, when an asset is being destroyed by a disaster or by accident, we will treat that asset as if it has been sold off. All right, as if it has been sold off. So this is it. Now, if a person is able to show proof, all right, by police report or National Fire Service, that the asset would have, it says that the asset will be considered as what? Realized to zero consideration. It means you sold it and the value you collected was what? Zero. All right. It means you sold it and the value you collected from the person who bought it from you is zero. Now the person may be granted additional capital allowance. All right. Yes, of course. Of course. Now it's like if the value was, let's say the written down value of that thing was 5,000. Okay. We are saying that when it's lost, or when it catches a fire in terms of any disaster, it says that the asset will be considered realized for zero consideration. Okay. And the person may be granted additional capital allowance. However, where the assets are insured and compensation is paid, the compensation that will receive will be deemed as your consideration received and deducted from the written down value before what the depreciable allowance or depreciation allowance is granted. Okay, so what do we mean by that? So this one, if it is disposed of via theft or burglary or a disaster, we said that you have sold it and it means that the consideration you receive is zero. If you now insure it and the insurance company is giving you the money, which is like, let's say the 5,000, it means that the proceeds that you receive is now what? The 5,000. All right. So that is basically what we are saying. Okay. I hope you had that. So if it is stolen, all right, and per the law, they can even give you that figure that is standing there because the asset is no more there. All right. Well, you remember that we said that the asset should be there at the end of the basis period, and the fact that the asset should be used in the production of an income. But here it is not there. But you have police report, fire service report that backs your claim that it was stolen. Therefore, capital allowance continues. All right. So that is that. You will be getting your capital allowance. So that is that. So if this is the value, you can be giving your capital allowance as usual. But so if it is 40%, 40%, if it was a class one asset, you continue your capital allowance. But if you collected money from insurance company as a proceed, then it means that this one is treated as your proceed, and therefore there is no capital allowance again. All right, so that is that. Where a depreciable asset is used in the production of an exempt income or incomes under temporary concession. Now, capital allowance shall be computed and deducted in calculation of from, all right, in calculating those income. All right, so that is that. Don't say, you know that the people are having concessions. Some of them, like you have the free zone, okay? Yeah, capital allowance will still be calculated and deducted in calculating those incomes. So the government will know that, yes, you've taken the capital allowance in the respective years. All right. So that is that. That is that. Now, but expiration of concession period. Now, capital allowance may only be claimed in respect of depreciable basis of that pool at the time, all right, of the basis period in the year of assessment, in which the period of exemption or temporary concession is what? Is expired. All right. So that is that. I will explain that shortly. So what that means is that we said that probably somebody has a 5-year concession. And these days they pay tax. It's just that up to 2023, April 2023, the tax was 1%. All right. From May 2023 coming, the concessional rate has been increased to 5%. So that is that. For all the concession, it's 5% now. So what this is an old kind of provision that existed. So this one, you utilize your capital allowance. All right, you utilize your capital allowance. So, but let's look at the free zone, for example. You see, the free zone don't pay tax, income tax for 10 years. So let's say a free zone has an intangible, which has a useful life of 20 years. Let's say the intangible is 100,000. And you do capital allowance. Useful life is 20 years. So how much do we have? We have what? 5,000 every year. Now, the 10 years, you see, this is for 20 years. So the 10 years, each year in the 10 year, they will be utilizing the 5,000. So after this concession, the years, they have they are left with only 10 years of these 5,000. All right. So that is that, which together is like 50,000. So each year after that concession year, they will be claiming the 5,000 like that moving forward. So it's not like you wait after your 10 years, you are now coming to enjoy the 20-year concession. No, capital allowance. No. So that is what you see here. Capital allowance may be claimed only in respect of depreciable basis of the pool at the time, all right, of the basis period of the year of assessment, which is in which the period of exemption or temporary concession ends. All right. So we have this one that says that capital allowance shall be computed and deducted in calculation of those income, even in your exempt side. All right, under your concession. Okay. Then upon expiration, capital allowance may only be claimed with respect to depreciable basis. So by the time you finish, you have a depreciable basis on your 11th year. All right, at the time of the, you say, so your, in respect of your depreciable basis of the pools at the time, all right, of the basis period of the year of assessment in which the period of exemption and temporary concession ends. So you continue, but this is a straight line basis because it's in year class 5. All right, so that is that. Okay. Now, the last aspect of this is that sometimes some people will buy the things on hire purchase. What is hire purchase? The hire purchase is a concept where when you buy the thing, you'll be paying. Let's say you are buying a car. The price of the car is 1 million, but you are not paying the 1 million upfront. You are paying, it's a hire purchase. So you have the car, you'll be using it to produce your income and all those things, which qualifies you for the capital allowance. You own the car, so that is that. But in terms of paying, you don't pay everything. Probably you paid 500,000 at the first day. So capital allowance will be granted for only the 500,000. Then each time you pay an addition, let's say in the second year you pay 250, the 250 will be treated as an addition, just like we do the class 1 addition. All right. So that is that. Then the next time you pay the extra 250, it will be added as what? An addition. All right. So that is that. So we don't compute the capital allowance on the 1 million straight away. We compute it on how much you pay on each time. All right. So that is that. So if you read this, we say that when it comes to capital allowance treatment on hire purchase, it's important to know that the ownership of the asset is not transferred until the payment is made. Therefore, capital allowance is available on the asset, will depend on who is claiming the capital allowance and who owns the asset for tax purposes. If the business owned the asset from the outset, I mean, by the hire purchase agreement, they claim the capital allowance on the full cost of the asset. However, look at this. However, if the business is owned by a finance, or if the asset, is owned by a finance company under the hire purchase agreement, the finance company will be entitled to the capital allowance on the asset. In this case, listen carefully, the business may still be entitled to claim, all right, to claim in writing, to claim the written down allowances on capital contribution made towards the asset. So this is the idea. Now, we understand that, like I keep explaining to my students, when it comes to leases, hire purchase, this is how it works. We have this company A and we have this company B. Now, company A is going to lease an asset of B, but it doesn't happen that it's a direct negotiation. Company A is using a bank. All right. So what is going to happen is that the bank will acquire the asset from B. The bank will grant the asset to A. So you see who is actually paying the B party is the bank. So in this case, the bank owns the asset. All right, that is that. So actually, the bank should be the one to claim capital allowance by the rules of capital allowance. All right, so that is that. So that is it. Now, you see here that in the cases, so you see, this is what we say. In the case, the business may still be entitled to claim the written down value allowance on any capital contribution made towards the asset. What does it mean? So it means that if, let's say, the amount in between these people is 1 million. If A has paid, anytime A pays to the bank, it means that A will be claiming the capital allowance for the contribution they are making towards the cost of the asset. This means that the business can claim tax relief on the portion of the cost it has what? Paid towards the asset over time. So that is that. So the more you, as you pay, that is the basis for your capital allowance. All right, so basically that is that. Okay, so let's look at this past question. I hope I can be able to do this thing in the next 20 minutes. All right, so let's look at the past question. Fafana Manufacturing Group, producers of special fruit juice, started business on, you see the date they started the business, January. All right, so it's very important for the basis of your capital allowance calculation. Preparing a financial statement to the end, 31st. All right, so this is what we have. The following capital allowance written down value were brought forward from the pool. So we have pool 1, pool 2, pool 3. Then we have office building, that is which class? Class 4. Patent, patent is what? Class 5. All right, the company acquired the following chargeable income. So what are we going to do? We are going to start with our 2016 year of assessment. We are going to start with our 2016 year of assessment. All right, so what do we do? Okay, so they said that they had constructed an office building and put it into use. Okay, so this is the opening balances. So it means probably we will be doing for 2017. Let's look at the requirements of the question. All right, we are supposed to do for 2017 and 18. All right, so it means the data below, the data above us will be for those 2 years. So these are opening balances. That is what we have, our opening balances. Then in the same year, the company acquired these. Okay, so we have the acquisition of all these assets. Wow, they bought assets. They bought. Okay, so what will we be doing? And it says that the following assets were also disposed of. Okay, computers, this is the disposal. Standing fan, this is it. All right, for cash proceeds. These were the cash proceeds. Okay. Now, the company acquired the following also in 2018. That's nice. One of the vehicles was involved in an accident, and the company received 45,000 from the insurance company. If we are supposed to do this thing for a whooping 16 marks. So what do we do? What is the name of the company? We start. We have what? Fafana Manufacturing. Company Limited. And we've been asked to compute capital allowance. So what we do is that computation of capital allowance. Then we have our year of assessment being 2017. Then we also have our basis period, January 2017 to 31st December 2017. Okay, then I told you that your answer booklet is such that you can't extend your classes like that. So what do? What you do is that you will do class 1, class 2, class 3. Just do it like this. Then, if you like, this is a full mark. So go to the next page. All right, go to the next page. Okay, or you are doing this thing for 2 years, so you can, but I prefer you go to your next page. So assuming this is my answer booklet, you can decide to go to the next page, or some people also decide to turn the answer booklet over, but I don't think that is really necessary. Or you can decide to come somewhere down and come and do your class 4 assets. Now the class 4, you know that the class 4 you have office building, right? So you don't need to really write class 4 because you said that each of them creates their own pool. So you have office building. Okay. But if you think that your answer booklet you can manage and continue and you don't know the number, but since you read the question, you saw there is an office building. You saw that there's another factory building. Okay. But just to be safe, just do your class 3 and 1 to 3 and finish. Come and tackle your class 4. But I can see that in this question, I have another one, office building. We have factory building also. Because the treatments are different. So I will prefer to do my class 1 to 3 first. All right, my class 1 to 3 first. Please don't go and put any total here. The totals are not necessary. All right, they are not necessary. Don't go and create another column for any total. You are wasting your time. So now let's start. We have our pools. So you bring your CD sign. All right. So that is that. So we know we have WDV brought down. Pool 1, we are told is 12,000. Pool 2, 520,000. Pool 3, we have 405. That is it. So if you want to go and do for your pool 4, your WDV, you see there is even a patent. So that is why you need to be very, very careful. This one is 540,000. So if you use this thing as your 4 and 5, continue. What happens to the ones that will come later? All right, so be mindful. Let's do for our class 1 to 3 and be very, very fast. In the same year, they added, they bought, so you do your addition. So let's do these ones. Addition. All right, so let's look into the addition. Now, immediately you see this, your job is to first do the classification. We know that this one is 4, right? So you know that. And you also know that plant and machinery. All right, here the question is that, is it used for manufacturing or is not used for manufacturing? This company that they gave you, you need to read the question. All right, now it is a manufacturing company, so you have to make sure that you put this one in 2 for manufacturing. All right, so that is that. How about file cabinet? File cabinet. What is a file cabinet? So you have to ask yourself that. So sometimes these are the only tricky places that the examiner can trouble you with. I mean, which ones am I adding up to see what is the classes of the various things? All right, it's very, very tricky. You have to be very, very careful when you are dealing with that kind of thing. A file cabinet is a fixture and fittings. Is that not it? So it is 3, right? Electric ceiling and standing fan. Yeah, that one too is the same thing. 3. All right. Window and split air conditioners. Yes. Where will you place that? That one too, the same thing. 3. Motor vehicles. We know motor vehicles are in 2. All right. Then photocopier. What is a photocopier? Photocopier machine, where will you place it? Of course, Photocopy machine is part of your equipment. 3. LCD television. Yes, LCD television. Where will you place it? LCD television 2. 3. Visitor's chair. 3. Office chair and tables. I think that one too should be 3. So that is that. All right. So we now need to add all these things up. So that is what happens. So let's look at the class 1 to 3 things that are in. So this one, class 2, I had 2. All right. So if I add those two, please, it's a pool system. Don't forget. So in the pool system, you add everything together. All right. So this one, 2.5 and 110 is, I think, is 2610. So that is what you do. All right. Then the remaining, this one I will need a calculator. Just a minute. So let's add the class 3 items. We had 10 plus 20 plus 157 plus 14 plus 3 plus 3.5 plus I have 5.5 plus 56, right? So if I add all those things together, I'm getting around 269. That is what I'm having. 269. Okay. So let's put all of them together. 269,000. So that will be here. 269,000. So be careful. These things, when you add them up, make sure you've added them up well. All right. Because if you start, and be careful, you have time. You are using 30 minutes to do this. So once you punch various sums, and it's like you have oh, then it means I made a mistake. So let's punch it again. Let's punch it again, because I'm seeing that I punched 3.5 and I punch another 5.5. Let's punch it again. So this time I'll add the zeros. Okay. So we have 10,000 plus, what do I have? 20,000 plus 157,000 plus 14, right? 14,000 plus 3,000. That is where I punch. Then 5,500. Then 56,000. Yeah, you see, I made a mistake. All right, so be very careful. I was going to tell you that anytime you punch these figures, punch them again. All right, punch them again. Just go over again, because you have 30 minutes to do this thing for 16 marks. So you punch them again. So always try that. Okay, try that. Then they said that in the same year, some of them were disposed of. Computer was disposed of. So disposal. Computer we dispose of 11,600. Okay. Then standing fan. Standing fan was in which class? Class 3, right? So standing fan to we dispose of 3,500. Okay. So is that all? The remaining information relates to 2018. Okay. So that is that. Okay. So now let's find the depreciable basis. The basis. Depreciable basis. So this one is 400. Do you remember what we said, that when the thing is below 500, we grant it as a capital allowance? So you won't do, and please remember to put the percentages on them. All right, remember on them. So here it means straight away we have capital allowance of 400 because it is less than, don't go and do 40% because it's less than the 500. So our WDV carry down is 0. All right, let's look at this one. So I have 520,000 plus 2610. All right, that gives me 313 0 1 2 3 3 zeros. This one is 30%. So immediately on still that on my calculator, I just do the 30%, and I have depreciation of 393 939. Sorry, 939. All right. So immediately I deduct 3130. Then I know that my WDV carry down is 2191. All right. So that is what I have. Please understand that the company commenced their business in January. If the company didn't commence in January, as we were doing for this class, you will be using the days like the way we counted it in the example that we did. All right, so now let's add this side. Let's add this one. I have 405,000 plus 265,500 is 265,500 minus 3,500. So I have 667,000. 667. Then I do 0.2 on that. That gives me 133,400. All right. So if I deduct from my 667, that gives me 533,600. That is what I have. That 533,600 is my carrying. Now, immediately once I'm done with this one, I just add all the capital allowances. So 400 plus 939,000 plus 133,400. So my capital allowance for this side is 107,200. You see, I did not do any total column. I didn't do anything like that. All right. So these are what I have. Okay. And in the same, once I finish this, immediately I finish this, I'm going to continue to do the ones that I have for 2017, 2018. This same thing, I'm going to continue. I'm going to continue. You see, I've still not come to these two parts. We will do them, but I'm doing the class 1 to 3 first. Your examiner allows that. He allows that. All right. So that is it. So you come to here, you come to year of assessment 2018. Then that is why I say do it in different pages. All right. So you have 101 2018, 31st December 2018. All right. You don't underline anything. We are continuing what we are doing. All right. The same class thing now. We are doing the same thing. We continue with that. All right. So make sure you space your work out. So this thing, I could have shifted it to some so that everything will fall in array. All right. So please make sure you do that. Now, what happened in 2018? So we will have our balance brought down, which here we call it what? WDV brought down. DV brought down. So of course we have 0 here. We have 2191. Then we have 533,600. So me doing this thing here, you see, it is now coming to cost me a little. All right. So it means I need to squeeze. So please do it on a separate page. All right. So what happened in that year? What happened? Okay. So in that year, I think there were additional acquisitions and additional disposals. All right. So for example, they bought a Toyota. It's not up to 75,000. So we are good. Then they bought Toyota pickup, only one, 95. So this 95, we will limit it to only 75,000. All right, we will limit it. So when you finish doing your calculation, write some notes. The Toyota was limited to 75,000 as per paragraph 3, subparagraph 4. All right, of the third schedule. So just do that. Just do that. Write it somewhere. All right, in your answer booklet. Then LCD projector. Projectors, where will we place projectors? We will think about it. Data handling, I think projector is part of computer. So data handling and computer, these two are all class 1. Trucks and trailers, do you remember them? A truck and a trailer, we said we can put it in what? Class 2. Yes, class 2, if you remember. All right, so that is that. Trademark is class 5. So that one we will hold on to that. Okay, so the contention is just this one. You treat it as an equipment, or you treat it as, okay, so you said computer and data handling. So it means that per that and other peripherals. You see, a projector, what do you use an LCD projector for apart from computer purposes? You can make the argument for that. You can make the argument for that. All right, and slot it in there. Other than that, it will just be an equipment, just like a photocopy machine we placed in what do we call it, class 3. So what do we do now? We have data handling, which is so the bone of contention is here. Is an LCD thing a computer-based thing? Or so sometimes these are the only challenges students face when it comes to these groupings of the assets. It's a very big challenge. It's a very big challenge. But like I said, you are allowed to state wherever you are placing what. All right. So I mean, explain it to the examiner why you are placing it inside there. Okay. For me, I believe that computer is part of the things that embodies, what do we call it? Really embodies LCD projector is something that also embodies a computer, because probably you want to project something from your computer. All right, that is what you use it for. So I will add it there. All right, so that is that. So I'll do my additions. So Toyota pickup and this saloon car, for me, you see that this one is 70,000, but the other one you limit it to 75,000. You limit it to 75,000. So please be careful about that. So limit that one to 75,000, and here will be what? And you have to explain it in your notes, and that is class 2, right? So here will be 145,000 addition. All right, and there is a trailer track too, all right, which you have to add. That one too is 54. So when you add those ones, you have what? 199,000. So that is that. So I've added, so that is why it is important you first write. So this one is what? 2, 2, okay, and this one is what? 2. This one, the contention is here. You can add this one to 3 and put this one to 1, all right, and put this one to 5. But like I said, the bone of contention is around this. It's around this, all right. So it said a computer and data handling devices and other computer peripherals. All right, so in terms of this, let's find the meaning of a peripheral, because if you find the meaning of a peripheral, that is from where you will know that, oh, it's a projector part of it. Now, these are English words. These are English words. So you have to at least get your get some meaning of a computer and a peripheral. A peripheral is just a devices that connect to the core computing units. The core computing unit. All right. So, and it has examples. It has monitors, it has mice, it has keyboard and printers. So even the you see that the other one they said it's a photocopier machine. A photocopier machine. So somebody will say that by a photocopier machine too can be connected to but please, it's rather a printer because you can just take a paper and just go and stand on a photocopy machine and print. All right. So these are the issues there. So now those are the things. Okay, those are the things. So if you have these days, if you have what do we call it? AI, which I have one, we can ask AI what AI says about that. So let's go to AI. Let's see what AI says about that. But for me, it is part of the computer peripherals. All right. So that is that. Let's see. Let's see what Chat GPT has to say about that. Just a moment. So let's bombard it. Is a projector part of a computer peripheral? So we had an LCD, right? So it's an LCD. Yes, projector can be considered as a computer peripheral. All right. It aids your display. Okay, it aids the display. So we have it. All right. So like I said, I will add it there. So my additions for this part will be 41,500. All right. So that is that. Do we have any addition for the tray? No. So it was between here. So like I said, I'll put it at, oh, did I write 3 here? I'll put it at 1. So basically that is that. So here, there will be nothing for me. But it says that one of the vehicle was involved in an accident and the company received an amount of 45,000 for that. So what does that mean? It means that we said that if it happens and there is no money received, then it means the consideration is 0. So what we would have done is that disposal. All right. The disposal, we are not talking about disposal as in the value of the thing that was disposed of, but here we just is the process that we are looking at. So if the process by fire and there was by fire and there was no insurance, you put 0 there. But this one that there is an amount to be received, it means that you put the 45,000. So it means at the end of the day, we can have our 41,500. We can have, how much will this one be? This one will be 2191 plus 199 plus, somebody may say, is the AI the final say on things? I mean, come on. In your heart, you know that with the purpose of a projector is to enhance screen display of your computer. So that is that. So ladies and gentlemen, I need to pick these things and throw them somewhere. All right, so that I can have space to maneuver. 533,600. Okay, then my capital allowance. So this one we know is 40%. So I have 41,500 by 0.4. That gives me 16,600. Then I have 2345 multiplied by 0.3. That is giving me 703,500. Then I have 533,600 multiplying 0.2. That is 106,720. So basically, that is what I have. All right. So capital allowance. I've done my capital allowance. This is the last figure I have on my calculator. So let me do minus 533,600. That gives me 426,880. I am not supposed to continue to 2019 because the question doesn't require me to go to 2019. So here too, I take my 2345 minus 703.5. What I have here is 1,641,500. Then the last bit. So these are my WDV carried down. I have 41,500 minus 16,600. That is 24,900. All right. So basically that is it. Okay. So that is that. Now I come to my this part. Okay. So here too, what I will do is that I will total my capital allowance session. Okay. Another way you can also do this is that when you are done with the 1, 2, 3 for year 2017, come and add the 4, 5 for year 2017. Then when you do for this one, when you do for the year 2018 for 1, 2, 3, then you do the 4 and 5 for the 2018. All right. So that is that. Because you have to do it like that so that you can capture the capital allowance appropriately. All right. If you do it like this too, I mean, you have to conclude in the year that this is the capital allowance for this is the capital allowance for that. So basically, that is that. All right. So how much will we get for this side? Only class 1, 2, 3, oh, that side. So what you do is that, let's see, 16,600 plus 703,500 plus 106,720. Okay, so here I have a total of 826,820. All right, so that is what I have for these ones. Okay, then here too I come, the same thing. I have to make sure that I put my year of assessment, which was 2017, so that we will know that it's part of 2017. Then the BP 0101 2017. The balance brought down was this one I have. So there won't be any balance brought down for this. So my depreciable, oh, there was an addition, right? Let's go back. There was an addition. Like I said, the addition, we don't add it here. So as for 2017, the addition creates that other part. All right. So you see the addition. And so the addition will not be here, but the addition of how much? 958,000 will rather be here. 958,000. So that is how it goes. So therefore, that was it. Therefore, I can now calculate my capital allowance. Don't forget, this is 10% on cost. It is 10% on cost. So if it is 10% on cost, this is the first one we had. This is the first one we had, right? And this is the second one. So what we have is that we only have 540. So 10% will be 54. That's it. 10% will be 54. All right, that is what we have there. Then what else? This one, 10% will be how much? 95,800. Is that not it? So these ones, that is what you have. Then don't forget you also had patent, which we know is class 5. We are told that the balance brought down is 48,000. And we know that it will be spread over the useful life of the asset. Okay, so over the useful life of the asset, it has 5 years. So 48,000, 5 years. So that one will give me 9,600. All right, 9,600. Okay. Oh, there were some additions. Let's check. Oh, there were additions. Okay, we've used these additions, so there is nothing more. All right. Plant and building, we've created it. This one we've used this one. We've also used this one. We've used this. So there's nothing left. All right, so 48,000, that was it. So if you divide it by 5 years, you have 9,600. So basically that is that. Where is my pen? Fortunately, pen is misbehaving. So you see, these things can be a little tricky, and you have to be fast with things, okay? You have to be fast with things. As I wait for my pen to come. All right, so pen is now back. So here we have 9,600 as our. So don't forget, this one is over 5 years. All right, so that is that. So that is what we've got. All right, I think that is all for 2017. So you can total this side too. So 9,600 plus what do we have? 9,500 plus 54. That gives me 159,400. So that is what I have. All right, so that is what you see in there. Okay, then we come here in 2018, year of assessment 2018, BP 01, sorry, 2018. I didn't do the extension for this. Sorry. So WDV brought down, which I didn't do. I have to do now so that I can just carry them and paste. So this one gave me 54, 540 minus 54. This one is 486,000. So quickly, 486,000. You can be doing it like that so that you save time. Or you can do it and copy. That is just a copy. So 95.8. That gives me 862,200. So I'll write the same thing, 862,200. Then we have 48 minus 9,000. 48 minus 9.6. So that one too gives me 38,400. So basically that is that. Then I'm through. All right. So the next one, my depreciation. Now, another way you can also understand is that you really don't need the written down values for these, because these ones we use straight line method, and you won't really need it. You understand that The question is asking you to calculate capital allowance. So at the end of the day, you can calculate your capital allowance. So you might not really need to record these balances because you don't need it. All right, you don't need it. So your capital allowance for this year, you know that for class 4, is there any addition in the year 2018? Oh, okay, there is a trademark. So you can do addition. And the addition, you create another one. So we should have probably created the trademark, but there will be nothing there. So here, balance addition of that is 72,000. That's all. That's all. Then here, how do we get our capital allowance? We still maintain these figures. We still maintain these figures. The same thing. All right. So here will be the same thing, 54. Don't forget it's on straight line. All right. This one is 10% on cost. So you do the 10% on cost. This one too, the same thing, 10% on cost. It's the same figure. All right. So that is that. Then this one too is the same useful life, 9,600. Then this one that you have newly, you do 72. What is the useful life of that one? You see, that's the reason why you can't add them like the way we do the class 1 to 3. All right. So 72, it is for 8 years. So that one is 9,000. So I have 9,000. So that is that. I don't even need to do the what do we call it? The written down anymore. So here I had 159. I just add the 159, 400. I just add the 9,000. That's all. And this year I will have 168, 400. So in the year 2017, you can see that you can tell the go ahead and add this one to the 2017 one. Then you add this one to the 2018 one and state that finally those are the capital allowances. Okay, so basically that is that. You are done. That's all. It says that what is the B part? The B part is what? Indicate how the pool system, oh, of course, we learned how the pool system, or you put them in the pool. Each asset loses its identity. Class 1 to 3, it follows the pool system whereby you add, all right, but from class 4 and 5, you create their own separate pools for each addition, all right. So that is that. If an asset is added into the pool, it loses its what? Its identity. And please remember, capital allowance is granted for assets that you are using to produce income. So if the question tells you that part of the asset is used for personal use, that part you won't calculate capital allowance for the personal use part. So you deduct the capital allowance for the personal use part. Okay, so this one too, you have a question. I'm not going to solve this one, but I'm just going through with you so that when you are solving it, the November 2021, you are solving it, you know what to do. The same thing, 2017. So this is what? Class 3, air condition. Class 3, land. Land will not be part because you remember we said interest in land. Land is not a depreciable asset, so don't even include it anywhere. All right, building, class 4, right? Purchase of a computer, class 1. Purchase of a photocopier machine. All right, so a photocopier machine, like I said, we don't use a computer to photocopy. You don't connect a photocopier machine, office photocopier to a computer. You see, photocopy, you can just pick the paper and go there and do the photocopy. We don't use if it is a printer, then fine. You can say it's a computer peripheral, but this one is class 3. Television set, class 3, right? Bought 4x4 vehicle, 7-passenger seat for an amount of 200,000 in 2018. Now, this one is something you have to be careful with because we learned something about a car, 4x4. Now, this amount that they used to buy the car is how much? 200,000. We said that those ones that you can add this 200,000, those that takes like more than half ton and what 13 passengers. You see, this one is 7. So please, you still limit it to what? 75,000. All right. Purchase of a file cabinet. This one is class 3. All right. So basically, that is that. In 2019, so all these things were in 2018, you 17, you do it, you come to 2018, additions. All right. They said that it exchanged the vehicle in 2018 for 4 plots of land. The value of the 4 plots of land agreed with the landowners were what? 200,000. You see, this is a barter trade. Though. So please, what are we going to do in 2019? What are we going to do? So it means that we are going to deem those is that it exchanged bought in 2018. What were those ones that were bought in 2018? This is our 2018. This is it. The vehicle, the 4x4. All right. It's 200,000. So remember we use 75, right? And it says that the exchange is deemed satisfactory to both parties and documents were carried through. So in this case, what are we going to do? Of course, we are going to, is that it purchase? No, we are going to go ahead and this 200,000 will be the proceeds we received because that is the exchange value. All right, so that will be the disposal amount you'll be deducting. All right, so that is that. Paid a trademark of 15, license for 10. You know that that is class 5. All right, so that is that. Purchase a business that is entitled, that resulted in goodwill of 100,000. Then the company decided to amortize the goodwill for 20 years. So this one is another thing that has come in, which is a goodwill that is an intangible asset. So this one is a purchased goodwill. All right, we call this one a purchased goodwill. Now, for a purchased goodwill, where do we place them? This is what? Class intangible. Class 5, right? It's class 5. All right, so that is what we have there. It's class 5. But we said something about goodwill. Do you remember? So these are the things, this is where you take your note very, very seriously. It says something about goodwill. Where is it? When we started this class, we actually said something about goodwill. Have you seen it? This means that capital allowance shall not be granted for costs incurred in acquiring goodwill and in what? Interest in land. So the goodwill, even though it is class 5, ignore it. So ladies and gentlemen, you have to be very, very careful. All right? You have to be very, very careful. Everything is in your book. You get a copy of the book, it will help. All right? So ignore that one. All right, so that is that. Where is the other information? Then in 2020, so this one to cost a lot, perhaps the reason why is 20 marks. All right. So in 2020, these are the additions: motor vehicle, office computer, class 1, trucks, class 3, class 2, sorry. Sold, what do you have there? Office furniture. So that is a disposal. All right. So basically, that is that. All right. So you go through that, you apply the percentages, easy peasy, you go 20 marks. All right. So that is that. This one. And please, like I told you, when you are solving these questions, look at the date. Look at the date. Look at the date. It's very, very, very important. Look at the date. So, for example, in 2017, when you are doing the capital allowance, this guy started in October. So for 2017, it will be only how many days in 2017 when you are doing the calculation? The A multiplied by B multiplied by C. What will be the calculation? So if you take the depreciable basis, the balances you have there, you take their respective, what do you call it? Percentages. Then for 2017, the days in it, because they prepare account to the year end 31st December. So October, 30 days are September, April, June, and November. All the rest are 31. November, October, November, 30, December, 31. So you use 92 days. So when you get here, it will be 92 days over 365 days. So the question we just did was beginning January 2, so we ignored it because 365 is 1. Any number multiplied by 1, 2 is the number it says. So by here, in 2017, be careful. But when you go to the 2018, you realize that it's January to what? December. All right. So please try and understand those bits of it. All right. Try and understand that. Okay. So I think apart from that, you are good to go. So try your hands on these things, and I think you will be well fed. Okay. So ladies and gentlemen, basically, these are what you go through and do. All right. That is what you go through and do. All right. Have a great day. Solve the past questions and see you in lecture 9.